Good afternoon. Good afternoon, everyone. At this time, I'm going to ask Johnny Chastain if he might give an invocation, please. 23.
Yes, sir. Dear Heavenly Father, we thank you, Lord, for this day. We thank you for all the blessings that you bestowed upon each and every one of us. We just ask you for your continual guidance as we attempt to do the business of this great state. Ask you to be with this committee and all that's here. In Christ's name we pray. Amen.
Thank you. At this time, we have Chairman Yurda, who has a bill, House Bill 439, that he would like to present to the group. And at this time, I'll turn it over to Chairman Yurda.
Thank you, Mr. Chairman. Committee, I bring before you House Bill 439. House Bill 439 is a bill relating to the compensation of dealers and merchants for reporting and paying tax and the reimbursement deduction that they get. Doesn't matter if it's your local restaurant or your local grocer or your boutique or hardware store. All these businesses collect sales tax and then they remit it to the state. In 2024, the Georgia House voted to form a study committee on credit card fees and sales tax and excise tax and their impact on Georgia merchants and consumers. The committee looked at the effects of card processing and processing fees on merchants and whether fees should apply to the sales tax transaction. The group didn't recommend changing the credit card fees or how it's handled. What the study committee did make a recommendation on was small business, helping small business in Georgia. It calls for raising the vendor's compensation. Every merchant in Georgia, again, is required to report and collect taxes on sales and remit them to the state. Currently, vendors may retain 3% of the first $3,000 and 1/2% exceeding $3,000 to cover their cost. The bill that I have actually mirrors the recommendation of that study committee, which is to raise this from 3% of the first $3,000 to 3% of the first $10,000, and 1/2% of the collected tax exceeding $10,000, which is the same for beginning in the year 2026. And each year to the year 2030, that over $10,000 percent goes up to 1.5% by the year 2030. This would add to the bottom line of small businesses that are really struggling right now with the effects of inflation, supply chain issues, and finding qualified employees. And certainly in Georgia, many small businesses have been impacted by Hurricane Helene. Georgia's been voted in the last 11 years the best place to do business, and our small businesses are a vital part of that. They employ the majority of our citizens in small businesses, and this is a bill to support those small businesses. Any questions?
24.
Thank you, Mr. Chairman. Chairman, if you'd educate me, do we have any idea of what kind of fiscal note this would be?
I don't at this point, but we are getting a physical note on that as we speak. It wasn't ready today, but I look for that pretty quick.
Well, thank you for that information. And a follow-up question, if I may. Remind me, when did this compensation, you might have already said this in your remarks, and I apologize if you have, but when did this compensation structure that this last get amended, or when was the compensation structure for our retailers last updated?
Yes, in talking with the Department of Revenue yesterday, they went back as far as 2005, and it has not been increased since that time at least.
So what you're telling me then is for the last 20 years, the retailers have not had an increase in the compensation, which the state of Georgia previously said they were due and entitled to for collecting the sales taxes.
That's correct, yes, sir.
Thank you. Thank you for your efforts on this.
Thank you, Mr. Chairman. Do we have any other questions? Let's see, 22.
Thank you, Chairman, and thank you, Chairman, for bringing this bill. Just a clarification, I know while we're waiting on the fiscal note, it's an important information to have, but the initial communication that I received kind of post the study committee that I was able to chair was that there's going to be not necessarily a net reduction in sales tax revenue for the state. It would just be a reduction of future increases, and that's the number that they're going to be providing you.
Okay.
I believe, is that an accurate?
I think that's somewhat accurate. Yes, sir.
Okay.
Thank you.
Thank you very much.
Thank you. And certainly, if businesses are able to retain more on their bottom line, they can afford to, hire more employees, also increase their inventory, sell more. So hopefully it has an effect on the other end that creates more jobs and helps those businesses and helps more businesses stay in business.
Thank you, Mr. Chairman. Are there any more observations? I don't want to take a vote today until we get that fiscal note so we know exactly the impact.
Yeah.
And we certainly can meet again before crossover to vote this out if that's the will of the group. But are there any other questions that this group might have? Representative Barrett, do y'all have a question? Bruce, Chairman, do y'all have a question?
Sorry. I was just trying to get a point of clarity.
We did amongst each other.
Okay. Thank you. Mr. Chairman, we appreciate you coming before us today and look forward to getting that fiscal note. Do we have anyone here to speak?
Thank you, Mr. Chairman.
Okay.
Thank you, committee.
Yes, sir. Please identify yourself and let us know who you're with.
Thank you, Chairman Williams, members of the committee. Dante Handel with ACCG. Just want to make a couple brief comments on the bill. Very much appreciate the request for the fiscal note. I think that information is important, and I appreciate the intent of the bill to help small businesses. Just a couple thoughts for you, but even though the compensation structure hasn't been changed in a while, as there's been an increase in the cost of goods, this is percentage based, that does result in more money being retained by those businesses. The change from that compensation on the first $3,000 versus the first $10,000 helps the smaller businesses, but any change in that rate, that percentage going from 0.5% to 1.5%, is going to have a much larger impact for those large businesses than the smaller businesses. So I'd be concerned about the impact to the local governments and eagerly await that fiscal note. Glad to answer any questions.
Thank you. Mr. Chairman, 24.
Yeah, so I apologize, but educate me how it would have an adverse fiscal effect on local government.
Yes, sir. So the amount retained by the dealers is an amount that's not given over to the Department of Revenue, that's shared as local sales tax with those local governments. So if the dealers are retaining more, that's less money for the local governments.
But isn't that what, follow-up question, in the local governments there to serve the businesses and the people of the communities of the local governments, specifically the counties? And would it not be fair to say that they've been having to accept an extraordinarily low compensation over the last 20 years, where the local governments had increased revenues and grown salaries and jobs and all that over the last 20 years? I mean, show me a county in Georgia that has not had salary increases in the last 20 years. They've not had a salary increase. Wouldn't that be a fair assessment?
I don't know that I agree with all of the statement, but I'm looking out for the local government's bottom line.
Well, don't forget the local government's there to serve the citizens, and these are the citizens of the local government. Thank you.
Thank you. Number 21.
So, I guess to put it in Ridley terms, the hell with everybody except the government. Is that kind of what we're doing?
Yes, sir.
Okay, thank you.
Okay, thank you very much, Mr. Handel. I think that's all. Next one is Lewis Massey.
Mr. Chairman, my comments are on the next bill.
Okay, so nobody else on this one. Okay, Ms. Holland.
Thank you, Chairman, members of the committee. I'm Angela Holland. I serve as the president of the Georgia Association of Convenience Stores. We represent roughly 2,000 of the 7,000 convenience stores in our state, and we consist of multi-generational family-owned companies to large corporate organizations. And thank you, Representative Yurda, Chairman Yurda, for bringing forth this piece of legislation that seeks to make retailers in this state whole on their expenses to remit state and local taxes. Last year, the members of our organization brought forth an issue, and we appreciate this body seeking a solution to that, and we're grateful for your support, and we look forward to seeing this bill move through the legislative process as presented today. And thank you, Bruce Williamson, for your comments on the raise. Yes, that's much appreciated. Thank you.
Thank you, ma'am. Is that Sheila Humberson?
Good afternoon, Mr. Chairman, members of the committee. My name is Sheila Humberstone with Stonebridge Consulting, here today on behalf of the Georgia Food Industry Association, representing your grocery stores. You're about to see how much time Angela Holland and I spend together because our talking points are going to sound very similar. We brought to you an issue a couple years ago, and I appreciate the fact that you heard our concerns and our frustrations, and you have brought forth a solution to those frustrations. So thank you for bringing the bill, and we support the bill. Thank you so much for your time.
Thank you, ma'am.
Thank you.
Thank you, Chairman. Appreciate you bringing the bill, and we'll certainly get back with you. We have another bill to discuss today. Representative Clint Crow, if you would come to the podium, please. Table, I'm sorry.
No, you're fine. I'll go wherever you want me to, Mr. Chairman.
House Bill 159, and make sure you give us the LC number.
All right. Thank you, Mr. Chairman, members of the committee. This is House Bill 159, working off of LC 339765. If you look at the bill, there's essentially only one change on here. It's a very small change on paper that has a very big effect overall. If you look at lines 13, we've marked out $3 billion, and on line 14 added $12 billion. So the Department of Community Affairs, through the Georgia Housing Finance Authority, issues bonds. They sell bonds to raise money to issue and underwrite loans, primarily for first-time home buyers, but they have several different programs that they do this for through their Georgia Dream program. We've utilized that through my company outside of here. We've sold several homes to buyers that were first responders, police, fire, EMS, teachers, Department of Corrections workers, and folks like that that needed down payment assistance or a more favorable rate than they could get otherwise using that program. So it's a really high quality program. We've got some numbers that we'll go over here in just a minute to kind of give some examples of how many loans have been done in our areas for this. But in order to do that, they have to sell the bonds to generate the revenue to then underwrite the loans. They are statutorily capped right now at $3 billion they can have outstanding in these bonds, and we are seeking to raise that. The expectation is that I believe early next year, at the rate we're going with the increase in house prices and loan amounts, that would be met by early next year, and they wouldn't have any more availability to sell any more bonds. And so we're looking to raise that to $12 billion. That would put us on par with some of our surrounding states. Some surrounding states don't have a cap at all on theirs, but this would put us on par with some of the surrounding states that do have a cap, and would potentially give us about another 8 years expectation before we would hit that amount in bonds with the increase in growth and the increase in home prices. One thing to point out, and I know some people had some concern, I did at first when I saw this too, the number is quite large, and was quite shocking when I first saw it as well. But this is not underwritten by the taxpayers of Georgia. This is the Georgia Housing Finance Authority is its own authority. They have their own credit rating. They have a AAA bond rating from S&P and Moody's. So when they issue the bonds are secured by the underlying assets, which are those mortgages that they issue, and over 98% of those mortgages are federally insured, usually FHA, VA, or USDA loans. So they are very, very secure. Out of the outstanding 14,000 or so mortgages that are out there. I think they had, low double digits, 14, 12, 13, 14 that defaulted last year. So it's a very, very, very small percentage that default. And when they do, the overwhelming majority of those are federally insured through those programs. So, and I'm happy to answer any questions that the committee has, and then we'll let our friends from DCA add some other information as well after the questions.
Okay, thank you. I'm going to start with Representative Ridley, 21.
Told you I'd take it easy on you. So, when did you say that what's y'all's expectation you'd be at the 12 billion mark?
The 12 billion would be about 8 years.
So, how much are y'all doing right now per year?
I'm going to let them answer that. I believe it's 150 to 300 million, something like that.
So,
Please tell us who you are.
good afternoon, Wesley Brooks. I'm the Deputy Commissioner for Home Ownership for Georgia Housing Finance Authority. Excuse me. So last year we did about $350 million in new loans. This year we're on target we have authority from GISFIC to do another $500 million this year, so $500 million this year. We look to do over the next couple of years really getting on to about $1 billion a year, which is on par with some of our surrounding states.
Okay, so, and what's y'all's interest rates? What kind of interest rates are you getting like on 30 years?
So right now, if you are a first-time home buyer and you qualify for our Georgia Dream program, our current interest rate is 5.875%. If you qualify for a VA loan, it's 4.875%. And we do that because of the tax-exempt bonds that we raise have a very low cost of funds, and we're able to pass that savings on to the first-time home buyers in Georgia.
What about down payment and credit scores?
Absolutely. So our average credit score right now is about 715, 716. It's actually a really good credit score. They have a low debt-to-income ratio, and that actually meets industry standards as well. In some cases, exceeds it. We're able to provide down payment assistance that comes from the proceeds of these bonds. So we don't ask the state for funds for that. We use the proceeds from folks making their payments to help others get that down payment assistance. And right now it's about $12,500 or $15,000 if you are a first responder, educator, or nurse.
Okay, continue.
Sure.
I guess y'all got $1 billion in assets right now. 750 of it's actually invested, and then the rest of it's in cash.
It's a mix, but there's a bit of that, yes.
And what are y'all getting? What's the interest rate on that 750 million or billion?
So
750 million. I'm sorry.
So most of that is in long-term money market funds. So you're getting a small investment because there's a very low risk profile. Much of that is actually already promised to programs. So if we get a federal grant and they give us the dollars, we don't let it sit in a bank account. It usually goes into a money market fund, usually Georgia Fund 1, and it allows us to get a small return on that while we're waiting to get the funds out. So when we're talking about that large of a portfolio, much of it is not funds that we're able to get out, but usually it's a lower interest rate.
So y'all got a $500 million cap, and you're asking for basically quadruple what y'all can right now. Y'all going from $3 billion to 12, and you're saying that you. I mean, basically that's going to be 6-8 years out. You're going to be at the 12 billion. So when are you going to? Why do you think you're going to go from 500 to $1 billion in sales? And I'm just going to kind of give this all to you at one time. How do you think you're going to do that when you've got a lower interest rate than the current banks have, better ways to buy stuff, and does the government really need to be competing with private banking? And how's it not going to end up causing them crisis at some point?
No, it's understandable. And so let me back up just a little bit. We're doing about $500 million this year, and that is really constraining some of the ability that we can serve the market. There are households out there that we're not reaching with our bond product, and there's more that we can do. The reason that that all 50 states and 4 territories have housing finance authorities, and most of which are doing a similar program, a bond-funded program, is because the market's not serving this demographic. If there's a reason we don't do a conventional loan, It's much harder for someone to save up 20% of a house that costs $300,000. $60,000 is difficult to save when you're currently renting at record rental prices. Our rates are particularly low. I want to be clear, though, that we operate through a network of private realtors around the state. So we're buying loans from them so they can make more loans for others. We're supporting that network. We are essentially a support method for those realtors to do more business. Those lenders, to do more business.
Yeah, I was going to say not realtors. We don't make loans. Originators,
Lenders.
mortgage loan originators.
Thank you.
So, okay, so you're buying loans too?
That we don't originate those loans. We buy the loans from the lenders. That's what we use the bonds for.
Okay, so y'all are not actually doing the loans physically. Y'all
That's
are,
correct.
Y'all are just acting like the big banks do. They're packaging them up and y'all are buying them.
If they meet our buyer or our lender profile, then yes, we will buy them.
Okay. I'm just going to be honest with you. When we've only got $16 billion in the rainy day fund and everybody keeps talking about that, it's just hard for me to let any agency get out on a limb like that. And I know we've talked before, and y'all keep saying, well, that it's not taxpayer based, but those departments, the USDA and all that, is funded by taxpayers of the United States. And
That's a good point. That is a good point. And I've had that question before and had that conversation with others. That is true. The FHA, VA, and USDA. What I would say to that is that those agencies are going to insure mortgages anyway. I would much rather them insure these mortgages than I would some of the other ones that they're insuring out there, because these are much higher quality with much better credit scores, much lower default rate. So if they're going to be doing it anyway, I'd much rather them insure these than many of the others. And just to clarify that point, they do buy the loan from the mortgage originators, but they do it on a per loan basis. So they are the underwriters.
So it's not a package deal then?
It's not a package deal. No, each one is done based on the criteria of that individual loan.
That's correct.
So the originator does it, and they say, Georgia Dream, here's this, we want to underwrite it through you. They look at all of the information the originator has gotten, the credit scores, all of the accompanying documents, the quality of that borrower, and then they decide whether or not that it meets the criteria, and if it does, then they buy that mortgage.
Okay, thank you.
24. Okay, 22. He lost his place. 22.
Thank you, Chairman. What is the current default rate?
The state default rate is 0.57%. Our default rate is 0.06%.
And how long has this fund been around?
We've been doing loans as GHFA since 1976.
And then what is the duration of that portfolio typically?
So our most recent deal, actually, Monday, we did another deal for bonds, and that one goes out to 2055? 2055.
All right, thank you, sir. Thank you, Chairman.
18.
Okay, thank you, Mr. Chairman. I just want to help clarify a few things for my colleagues up here. You can only be a first-time homebuyer one time. Can't do it again. So this money is turning over rapidly. Every time that somebody comes in to get a loan, they can't turn around and use this program again. Simple fact, it's like a warehouse. You know, I got everything in the warehouse that I need to help facilitate these small demographic that we have. And when I had my mortgage company, 700, that was a great score. So for them to have their mark start at 700, it was 600 back when I was doing loans. So the medium credit score was 600 to actually get a loan. Now it's 715. So they have upped the stakes on what they're doing on their program. And these are first-time home buyers, like I said earlier. They don't necessarily have anywhere else to go where they can get down payment assistance. That's like they said earlier with the 20%. It's hard for anybody to come up with 20% depending on the size of the house and the price. Right now, I mean, we're renting and paying $2,000 a month. And why not get a home where we can pay lower amount for the same or better product of home ownership? And it's the first time they're doing this, and they can't do it again.
Are they not knocking you out of making money as a mortgage?
No, I'm out of the business.
No, I mean, but if you was still in business, By them going down, does that knock you out of getting the money from doing the mortgage?
No, it's not knocking me out because I can give them a better rate. The way loans are set, they're set up by credit score and the points that you attach to the loan, which they have decreased since I've been in the business. Also, it's only a certain amount you can make now. But no, it's open field. Like I said earlier on a bill we had earlier, where they pigeonhole me because they can't, they didn't want anybody else to call the provider once they selected a loan. And they pigeonholed me because I said, well, why can't I call the person? I might have a better rate and a better plan for what that homeowner is anticipating with that first company. Does that make sense to everybody?
Yeah.
Okay, thank you.
Appreciate
It was
it.
drawn out.
Number 25.
Talk to me like a 12-year-old.
Speak your microphone, please. Thank you.
Talk to me like a 12-year-old and walk me through just a typical transaction. If I were looking at the balance sheet, I see I've got about $3 billion in total assets, $2.9 billion, and I think 2.6 something and billion in liabilities. A typical transaction, let's say a multifamily affordable housing effort for something.
So just to clarify, this is only for single-family, first-time home buyers. The multifamily project, not factored in this at all.
All right, so a typical transaction then for a home.
Sure. So we have a network of more than 100 lenders around the state. A home buyer is working with a housing counselor or that lender and says, you know, how much can I afford? They'll go find the house that is within their budget, and the lender will take them through that process, whether it's a GHFA loan that's going to ultimately that they're ultimately going to get, or if it's Bank of America or whoever else. And they'll say, these are the products that I have to offer. So if they qualify, income-wise, credit score, debt-to-income ratio, if they find their house, they're able to close on it, they will get the loan through their local lender, through that lender, and that lender will then get recapitalized by us at the closing table. We will take these bond funds, pay the lender for their portion, we take that loan onto our portfolio, and then we service that loan at GHFA. They'll make their monthly payments. We'll use those payments to pay back our bondholders or our investors. And if for some reason, back to the original question, if someone were to get foreclosed on or they couldn't make their payments, we are then able, as their servicer, to sell that property, a foreclosure sale, and repay our lenders. We haven't had an issue where property is underwater and we've had to lean on FHA, VA, or USDA.
So you typically hold that. It takes it off of their balance sheet, puts it onto your balance sheet.
Correct.
You hold it until maturity, I guess?
Or until they pay it off, or early payments, that sort of thing.
Okay. Thank you.
Thank you. 24.
Thank you, Mr. Chairman. I apologize. I wasn't available when you first called on me. But thank you for educating us on this whole process. And you said do y'all service a loan or do you use third-party?
We do service a loan in-house.
And then reiterate again what the default rate is. Did you say 0.06?
That is correct, 0.06%.
So that is 6 people out of 10,000?
We have about 14,000 loans, so it wound up being, I think, 12 loans last year.
Oh, that is amazing. And we've talked about they're typically 30-year loans.
Typically, yes.
Fixed rate.
Yes.
And how often are these things, what's the average of life of one of these loans before the home is sold or paid off or whatever?
We usually calculate about an average of 7 years.
So it's turning over that rapidly.
That's correct.
And then, so as far as who manages the funds, manages the money that you're holding, do y'all do that in-house or do you use third-party money managers?
So there is a portion of it, that which is in the bond fund is managed by BlackRock.
Okay.
The funds that stay within GHFA that are not within the bond fund, the majority of that is managed in-house, but it's about 75% of it's in money market funds, most of which, as I said, is in Georgia Fund 1. So the same investment arm that local governments use, we use the same. It's very risk-averse portfolio.
Is it constrained by Georgia code about what the available investments are on that, or what kind of oversight do we have on the pot of money that you're managing at DCA?
So the board and GISFIC.
Right. So the GHFA's board and GISFIC manage our investment strategy, which is governed by that same.
And that's the in-house employees of DCA?
No, it's the board.
Right.
It's the DCA board, which you sat on,
Mm-hmm.
or the GHFA board.
Right.
And the Georgia State Financing Investment Commission.
Okay. As the commissioner mentioned, I did have the honor of serving on the DCA board, but it was 20 years ago this year that I was on that board. And at that time, we had experienced some unexpected losses when the DCA was managing all of that money in-house. And through Commissioner Beatty and some efforts we made, we did put that out there. So it's still being professionally managed.
That's correct.
Super. Thank you.
Thank you. 23.
Thank you, Mr. Chairman, and thank you, Chairman Crowe, for the presentation. Just one question. I understand the concept and good with pretty much what we've heard, but as a banker, you see that $3 billion to $12 billion is just like, and where that $3 billion's really been working up until what you said and what we expect to go forward. Has there been any thought about staging? Is there an advantage to go ahead to go from 3 to 12, or is there any advantage to go to stage it?
Mind if I?
From a smaller number.
So the last time we actually had an increase, we asked to go to $5 billion. Had it not been for COVID and really how that tamped down the amount of work we were able to do, we would have surpassed the $3 billion a couple of years ago. We asked for 5, we got 3. It was probably, we would have come back 2 years ago had it not been for COVID. Ultimately, GISFIC and our board approve our authority every year for how much we can issue. So there are governors in place. This is just ultimately what the collective amount adds up to that we would need the authorization for. So as we talk about how we would step up to a number, I think some of that is just it's already built into the checks that we already have from GISFIC and our own board.
Thank you. Number 1.
Thank you, Mr. Chairman. I'm going to ask you a couple questions, and you kind of answered a few here. What size of the portfolio mortgages are average? What are they, the sizes, and how many do you do a year?
So last year, our average loan amount was $230,000 roundabout. I would mention that the last time, right before COVID, actually, that average amount was about $150,000. So we've seen a dramatic increase in the cost of housing in the state, and that's reflected in our loan amount.
Okay, and COVID's over, so I don't even talk about COVID anymore.
Understood.
And with that, why is there a need for equity investment fund, $700 million attached to the authority? I mean, I'm trying to look at it from an 11-year-old perspective as being, something that I do not do every day. I have several friends in the mortgage business, but that, and then I would like to also, you said you asked for 5. Instead of jumping to 12, I'd love to amend it and say 5 or 6 billion if we were going to gradually go up instead of jumping from 3 to 12 billion. Is that something you would look at?
So, can I take your first point?
You handle the first and I'll handle the second.
Thank you. So, on the first point, really around the assets that GHFA holds. Much of that in the short-term portfolio, and I think you've got the numbers in front of you, is really program dollars. They look like investments, but they're money that's going out to do all the other things that GHFA does as an authority. When we look at what's in the bond fund and our long-term investments, when we talk about GHFA has a AAA rating, those are dollars that S&P is looking at to determine whether or not, if everything fell out, if for some reason all of these folks stopped paying their mortgage, can we still pay our investors? And that is, it looks like a lot of money, but our margin is paper thin. When we got our last rating, it was 100.1%. Okay, so any cut in that, we start to get lower bond ratings as a result. So the reason that it looks like we have that much just sitting around is really to make sure that we are a strong investment for our investors, that they can look at GHFA and say they're giving good loans, They're making sure these are good borrowers, and they have the cash to cover it if that's not the case.
And to the second question, we would defer to the wisdom of the committee on that. Obviously, it's better to not have to come back repeatedly and do this every couple of years, just for operational purposes. But, you know, I think that the immediacy of it, any increase would be great, but I think the 12 billion would give us some room to not have to come back and do this every couple of years, because we didn't have to have this go through the process again.
And thank you, I appreciate that. One more, what happens, you read my writing, what happens to the additional investment income coming from those equity accounts?
So usually that's how we fund our down payment assistance. It's how we fund the folks who are doing the work every day, that are underwriting files. It's how we really manage some of the additional support that GHFA is able to give in the housing market.
Thank you.
And just one thing to point out about the down payment assistance. I know there was a question about that earlier. The down payment assistance on the Georgia Dream program, if that's done as what's called, it's a silent second. So basically that is a loan that there's no payments due on it as part of the monthly mortgage payment, but that money is paid back when it sells or refinances. So that is essentially a loan that there's no payment due on until it sells or is refinanced. So it's not just a gift.
That's correct. Thank you.
All right, thank you. There's been some chatter up here, and I think what's given some consternation and some heartburn to some of the members is that jumping up to 12 billion. And I think what I'm hearing, what I'm sensing from the group is maybe if we were to ratchet this down maybe to $6 billion, I think I might have had someone that wanted to do an amendment. What's the will of the group on ratcheting it down to?
Mr. Chairman, I'm sorry.
Yes.
I think Commissioner Nunn wanted to
Sure.
speak if he may too. And
I'd be glad
would
for him to speak.
The only thing I would like to say about that, again, I will defer to the wisdom of the committee, but this is going to have to go across over yonder. So if we do too much ratcheting down over here and then they want to do some ratcheting down over there, there may not be no ratcheting left to do. Just throwing that out.
Point taken. Point taken. Yes, sir, Mr. Nunn.
Thank you. Can you all hear me? So thank you, Mr. Chairman, and thank you for the hearing today. And I just wanted to follow up on a couple of points. I appreciate Chairman Crow highlighting or making very clear that the down payment assistance is a loan. That was one comment. I also wanted to make sure, and I appreciate Wesley highlighting, we are not competing with the private sector. This is in conjunction with the private sector. A question that I think has not been asked that gets to this very point, without some increase in our ability to issue bonds, which have no fiscal impact on the state. And let me read you off of the face of the bonds that were issued yesterday. The 2025 Series AB bonds will not be deemed to constitute a debt of the state of Georgia or its agencies or a pledge of the faith or credit of the state or its agencies. So this is debt of the authority. However, we need, because of the statutory limit, the permission to continue to raise private funds to help drive home ownership in the state of Georgia. There are members of this legislature who have purchased their first home with this program. I was talking to a Capitol police officer just the other day who bought his home last week using this program. Georgia has the lowest home ownership rate in the Southeast. So if you look at all of our sister states, and Chairman Donahue, you asked a question about volume. So my deputy commissioner was talking about dollar amount. Last year, we did about 1,500 loans, and that's what we've projected out based on our current ability at $500 million of annual debt issuance. Honestly, pre-COVID, which is long over, we were doing about 2,000 loans a year, but given price points and housing, actually during the COVID era, we got down and we're doing 700 loans a year. That's the only way we've been able to make do with the $3 billion cap. We would have hit that several years ago. If you look at the state of North Carolina, last year did 5,500 first-time homes purchased through, again, the private sector working in conjunction with their housing finance authority. The state of Tennessee, I was just texting with my colleague there, over the last 3 years, they've done $3.7 billion in issuance to support. Sorry, I don't have 12,000 mortgages. That's not over the last 3 years. No, actually, 12,000 mortgages over the last 4 years. So, a part of our strategy is to help drive home ownership in the state. And as Deputy Commissioner Brooks said, I don't think that we would be looking to continue at our current rate. We would be looking to continue to attract private investment, to invest in first-time home ownership programs using a tool that is, quite frankly, as he was sharing the current rates, is a very competitive product in the market today because of the fact that we're able to leverage those tax-exempt bond issuances. So I would respectfully request that you think about what that proration is for all those reasons, but certainly defer to the will of the committee, and thank you so much.
Thank you.
All right, thank you, sir. 25.
So I know that this is probably time sensitive, obviously, and I'm just doing some basic math. What's the average loan size?
This past year, it's been about $240,000.
So at $200,000 on doubling the number of mortgages this year to 3,000, that'd be $600 million. And I just think it's a great opportunity for us to really do the proper job we could do for you, which is make sure we really understand GHFA to get you what you really need. And I mean, I've not reviewed financials or anything like that, but I know it's about $600 million a year if you double the mortgage size based on 200. Add another 50 or 60,000 that you had just mentioned. Still probably 700 million. So still a lot of room between 3 billion and 12 billion. Just curiosity. I'm eager to learn all about it, and so I can do a good job for you.
I appreciate your math, but those prices, that average price will probably continue to go up as well over the next couple of years. Prices have flattened some, and the reason we've had a slowdown in some of them is there are no homes at $230,000 that you can find now that they can buy. Because the condition of the home has to qualify as well, right? I mean, the home, especially if it's FHA or VA or USDA insured, it has to have a special appraisal done, and that appraiser is going to come out and check the livability of that home as well. So if it's not in a certain condition, the home's not going to qualify. So now, in order to qualify for that loan, the house is going to have to be in at least a certain level of shape for livability. And that's really getting hard to find in most areas for $230,000.
Okay, I'm going to take one more question, and then I know we had one person that wanted to speak. 21.
So I guess I was a little unclear. So are you willing to do look at amending it and doing like $6 billion instead of the 12? She's shaking her head no.
I mean, I'm willing to do whatever the committee suggests. I mean, I don't know that we have I would prefer not to.
Why don't we let us hear the guest that wants to speak, and then maybe we can come back let's get all together and come back next week with a firm number, and that way we can make sure we do it right, instead of just make a knee-jerk reaction to something this monumental. Mr. Massey, would you like to speak?
Thank you, Chairman Williams and members of the committee. I'm here today on behalf of the home builders of Georgia just to support the bill. We think expanding the cap does make sense to help with the affordable housing shortage and will make home ownership more affordable for Georgians all over the state. We certainly defer to the author and appreciate Chairman Crowe bringing the bill, but defer to him and the wisdom of the committee as you continue to deliberate. We just wanted to say on behalf of the home builders that we support the concept. Thank you.
Thank you very much. Number 17.
Thank you, Chair. I just want to say I keep hearing a lot about the need and the lack of affordable housing. And I was in a hearing the other day when I found out that these corporations coming to Georgia buy so many homes. The national average is 3%. The average in Georgia is 30%, over 30% of homes are being bought by corporations. And we keep this moniker about Georgia being the best place to do business. Well, it'd also be nice if it was the best place to come and be able to afford to buy a home. This is one important way to do that. And I appreciate you bringing the bill, Chairman Crow. I hope that we don't miss this opportunity to really do something concrete to help people that want to buy homes. Thank you.
Thank you, ma'am. Appreciate that. And I think it's the will of, I think I'd speak for the committee. I think we want to get this right, and we don't want to make like I said, a knee-jerk reaction. So if it would please the chairman and the committee, if we come back next week, let's get a firm number and come back, so we're not saying, let's do this number or 6 or 7 or whatever. Let's come up with a firm number and get back next week and have us a good discussion. And I appreciate y'all's work, and maybe we can get it rectified next Wednesday.
Well, I was just going to ask if we could do it earlier next week, because if we do it next Wednesday, it'll never make crossover.
Well, we'll see what the calendar looks like, but let's do something next week if that pleases, that pleases the group. Thank you. This will adjourn this meeting, and I appreciate everyone in attendance. Thank you.
Can I borrow this?
Yeah, please.
All right, thank you.
You want this one as well?
No, just this one. I wanted to talk to Ridley real quick.